obviously, we haven't the faintest idea what the stock market is going to do when it opens on Monday.
Yes, that is exactly what he said. Warren Buffett basically said, I don't know what's going to be taking place Monday or even beyond Monday, because Warren Buffett is an investor. He's not a trader. You got to love him because as far as the investing world, he is the best in the world. However, this is a channel for traders, and you absolutely do need to get a really thorough understanding of what could be taking place on Monday, or more essentially, what could start taking place Sunday at 6 p.m. if you are trading futures. In the last video, I've pointed out it's essential that you trade with a futures account. We trade options on futures here at 13 Market Moves, and that allows you to capture the moves that majority of the market participants don't get to participate. Some of the biggest moves this week, they will happen before the market opens. They will happen after market closes. So if you want to capture these huge moves in the next 2 weeks, please make sure you set up a futures account. If you don't know exactly how to do it, get in touch with the senior trader here and we'll help you out. So as everybody is watching the Warren Buffett annual show, the annual meeting, okay, it's fun to watch. You can learn a lot of great things if you're an investor. But again, if you are trading the market, if you're a daily trader, if you're a swing trader, if you take short-term trades, okay, I'm about to show you what you should be prepared for Monday. We're going to glance at a ton of historical chart that highly resemble current circumstances, and we're going to try to warn you of what to possibly avoid. We're going to try to warn you of what to possibly consider. And if you have any questions, again, you can schedule a call here at 13MMTV and talk to a senior trader. So as Warren Buffett talks the words of wisdom, we're trying to get prepared for the craziest trading week in the markets we probably haven't seen in a couple of years since the COVID crash. So before you put on your next trade, guys, let's get prepared. So this is exactly what's happening right now. This is the current chart. We're looking at the last snapshot of S&P 500, April 29th. And I want you to pay close attention as we go for the historic examples. I want you to pay close attention to this orange line and the dot. The purple dot right here is actually where we are in the market right now. Understand that this right here is a pattern that highly resembles head and shoulder pattern. As you can see, when we get up to the top, the most recent top, the volume is actually diminishing. So this is a sign that this could be the last top. And besides the pattern, we've got conditions that I want to point out before we move for the historic examples. We have a condition of a death cross right here. So all of these recent bounces, they go to key levels, and we're unable to break higher when we observe a potential head and shoulder formation. Sometimes the shoulder formations that could be going sideways for some time right before actually making a drop. Sometimes they don't, and I'm going to show you a couple of examples that will point out the difference. But again, the overwhelming presence, the death cross, a highly bearish pattern that is evolving that could break lower at any moment. Sometimes the shoulders, they will not be built out for a while sideways, and again, we could get a drop very sharply. So understand this picture as we're going through. Also, another criteria for you to definitely focus on is we're going for this chart to identify which one of these historical examples resemble current conditions the most. Understand the tornado pattern here. So top one, top two, top three, okay, and we start dropping. And that's after all of these conditions are after setting a recent all-time high of close to 4,800 on S&P. Okay, so again, we're testing this bottom right here. 1, 2, 3, 4 or 5 times. I mean, this is close enough, so let's call it 4 times, and we're here now. So this is the 4th time we'll get to a level of 4150. We finished at 4131 here, and the question is, will we break lower? Because a lot of times when the market comes and tests a critical level like this, everybody's watching. All the hedge funds are watching. all the big players are watching, okay? And based off the 13 market move sequence, guys, I can tell you that we can get a magnificent move that could potentially allow you to trade this market on both put side and call side. And this sounds crazy because if you watch my most recent videos, we've been highly bearish on the market here at 13 market moves. But understand also this, that we're now 700 points under the top. We're 600 points under the most recent top. And at this point, within short term, to expect a crazy move, it could definitely happen. But be prepared for some wild bounces if we get a wild move Monday lower. And let me show you as we go for this, for the candle formation, to help you understand what could be taking place. Now, the most important piece of data that the market totally neglected was the negative GDP. To help you understand the context of this chart and where we could be heading, the negative GDP generally would call for a rate cut. So as you know, Federal Reserve has got a meeting next week, and I don't think Federal Reserve can do anything. It doesn't matter if it's a quarter point. Now the current debate is whether it's going to be a half a point, potentially even 0.75. We don't believe that's going to be the case. If that's going to be the case, clearly the market will have a strong reaction to this. But I want you to focus on this underlying condition where GDP actually is contracting and Federal Reserve continues to increase rates at the same time. There's only a few instances in the history where that took place, and the prime example is that in 1973. So if we're talking about conditions, GDP contracting, and the Fed raises interest rates, where it typically would be cutting them, or at least not increasing them, right? We're exactly in this historic time frame, 1973, 1974. And the question is, how low can we drop here in the next 12 months? And clearly, how low can we drop Monday? How low can we drop next 2 weeks? Those are the answers that we're trying to show you on the chart. So very important aspect to understand is we're now showing you this data from 1973. I've pointed out in one of the recent videos that this was the first rate hike. In the end, the second rate hike is when the whole economy goes into stagflation. And basically, this is where things really start falling apart. And if you put this second rate hike, this is where the market really begins to fall apart like crazy. So the first rate hike recently we just had. So this week, the second rate hike would be the main catalyst for things to really begin to fall apart. And this is how it looks on the chart with the perfect tornado pattern in April, October 1973. There's actually two instances. This is why I have two purple dots here and two orange lines. So the first instance that highly resembles the pattern we're looking at right now is right here. So you see this triple top, multi-top formation. Here's the drop. Here we are, we're coming to this orange line, and this is where we are in 1973, matching this purple dot right here, guys, to where we finished off on April 29th. As you can see, based off this historic example, we're looking at a sharp drop, short term, followed by a bounce, another drop, a bounce, another drop, another bounce, followed by a huge drop. Now this time around, I mean, this is like a 40-50% drop here. And of course that happens after the second rate hike, which would coincide with the situation right here. Short term wise, we're looking at a drop maybe 10-15%. Long term wise, in 12 months, based on this historic analog, we're looking at another 40-50% drop from here, which would put us at the March of COVID crash lows, about 2,300 on S&P. So we've got ways and ways to go. But the pattern, the significance of the pattern, I think this is one of the best matches in history to the chart pattern that S&P is actually showing us right now. And let's go ahead and take a look at some other historic examples which could be pointing to us what could be actually taking place Monday. So here's another scenario. We're looking at 1998. As you can see, similar formation, right? Here's this potential head and shoulder formation. Here's the def cross, right? So we're coming to the retest of this level. Back then it was closer to the 900 in S&P. And we do get a break. Notice from that purple dot, we do get a break lower. We do get a break lower, and it's a pretty meaningful break, right? I mean, it's back then, I mean, that's about 10, 11%. And based on how this candle evolves, right, this is the bottom. This is the flush. This is where everybody says, hell with it, I'm out. So the market conditions are pretty close to this, to where Monday, and I think the sell-off could begin as early as Sunday, 6 p.m. Everybody, once the market opens up, the futures open up, we basically could be looking at a huge gap down, and then Monday the market opens and we could be going lower, which is going to be complete flush out. I mean, we can get a huge drop, guys. I mean, we can get 300-400 point drop either Monday or Wednesday night. So Monday or Wednesday night, those are your big drop days potentially that could last into Thursday and Friday and the following month. As you know, through the history of most of the crashes that I have shown you here in this channel, is the fact that most of the crashes, they're not one-day crash like in 1987. The market gets weak. It continues acting weak until the weakness in the market accelerates. So in this particular case, we're looking at 1998 as the market approaches these levels that have been trying to test 1, 2, 3, 4, 5 times, right? And we're approaching the purple dot. We get a 10 to 11% drop literally within like 2 days, okay, 2-3 days, and then the market starts bouncing. And this would be an equivalent of a move 13. So as Charles suggests, you review the move 13 in the 13 markets move formula course, because this could come fast. All right. In the case of 1998, the market pulls out for a little while, it goes high, and then of course, you know, it drops again. But 1997, we have a condition where at the retest, okay, we have similar conditions, right? So there's basically first retest, second, third, fourth. And the cool thing about this historic analog, right, it's matching time frame wise. I mean, we're looking at about 5 months here. Okay, we're looking at August, September, October, November, December. So July. All of this basically matching the time frame of the current S&P chart. So this example I really like because it tests 4 times. The purple dot would be right here. As you can see, it's also very drastic. So the market gets weaker, series of lower highs, and then you have 2 huge candles. And so when you put this into perspective, it also looks like a move 13 where you get a really sharp day and you get a major reversal almost in like the same day or the course of just a few days. So expect a huge move lower followed by a potential huge bounce. In other words, the market could drop Monday, Wednesday to such a level at which everybody is going to say, you know what, hell with it. At this level, I'm going to take the risk. I'm just going to buy stocks here. I don't care. So look at the signs. And if you're trading with a senior trader here at 13 Market Moves, it shouldn't be a problem because we're going to be watching the market like a hawk. These sort of conditions would allow you to make, I mean, you could be coming in with 100,000, you can end up at $1.5 million, $2 million over the course of 2 weeks trading weekly options with us. All right. And we've got a number of students that have accomplished this at this point. We know exactly what to look at on these reversals. We have nailed so many reversals that if anybody can help you nail this move 13 type scenario where something just collapses and the next thing you know, everybody's panicking, but we're actually buying calls. I've shown you this times and times where we've been buying calls when the markets are just completely collapsing and we're actually catching the bottom in these sort of moves. And so right now, I mean, we're in puts and we're expecting a huge drop on Sunday night, Monday. But if that doesn't happen and maybe we get a candle, what I call an indifference candle, right? the market could say, well, let's just see exactly what's going to happen Wednesday. I think that's the least likely probability. I think people are going to be saying, hey, we don't know what the hell is going to happen Wednesday. Federal Reserve meeting starts Tuesday, right? Wednesday, they're going to announce the decision. Like, I don't want to be in this. I want to get out before, okay, that announcement comes out. So we could have a situation where people are going to continue selling into the Federal Reserve, and then it's just going to be a matter of what exactly the Federal Reserve is going to say. It's going to be a quarter point, half a point, or they're already going to sidestep back after this GDP number. So understand that this is a really good scenario based off the 1997 analog, 1998 analog, similar thing. It's the flush. It's the last people are getting out, they're panicking, and the market hits such a level at which the people like Warren Buffett, okay, that's when they would be buying, right? The blood will be spilled, and that's when Warren Buffett is going to say, hey, let me add some shares here. I've been waiting for this sort of opportunity, okay? And even though he's saying he doesn't time the market, he doesn't time the market from the perspective of on daily basis. He's got a very long-term view because he operates with billions and billions of dollars. When you're a retail trader and you're working with maybe a small account like 100K, $1 million bucks, okay, that's nothing compared to the money he operates. So to him, he can't even establish position in one day. I mean, when he builds his position, probably takes him a week or 2 weeks to buy enough shares without substantially impacting the price of whatever he's buying. And then it takes him an equal amount of time to sometimes unload those shares. And so understand his horizon, simply because of the amount of money that he's dealing with, is totally different from the type of trades that we're doing here. So if you're trading with 100K, $1 million, this strategy is going to make you 5x, 10x, 20x here in the next 14 days, guys. 14 days. I'm sure you will hear some testimonials from our students over the course of the next few weeks here. And you're going to be sitting there wondering, well, why the hell didn't I sign up? So I'm posting this video to show you what's about to happen. And it doesn't mean it's going to happen exactly like what I'm saying. I could be off by a day or two. Instead of Monday, it could be Wednesday. It could be a follow-through reaction on Thursday. But what I can tell you is the market will be moving wildly over the course of the next 7 to 14 days. And with that comes one of the greatest trading opportunities. So let's take a look at the next example here, which is 2009. And so in 2009, we actually have a really, really good match from the standpoint, okay, so the market is here, comes off the market high, it drops, tests the level once, tests the level twice, tests the level 3 times, the 4th time. And it's got exact same identical pattern right here, right? It's a tornado pattern. 1, 2, 3. Tornado top 3. And then we get a major drop. Now notice this candle right here. So we're at a purple point. Notice this tail. So this could be Monday. And notice this sharp sell-off is followed by a sharp reversal. But then the market can't really hold it, right? 1, 2 days. And then so this could be Wednesday, right? And then we get a real drop. And then market bounces out, goes sideways for a little while, and then looks similar condition. So if we're to look at this 2008, 2009 analog, I mean, we're either looking at the purple dot to match the current conditions. We're either right here or we're either right here. So if we're right here, we're going to get a historic match that would be an equivalent to the move 13, where things just fall apart within a very short amount of time. And then people start buying the dip like crazy. That would be more of this sort of scenario here. Or this would be the purple dot right here. We get a lot longer lasting drop right here. But in either case, all right, similar formation right here. We're testing 1, 2, 3, 4. Okay, in both instances, there is a move lower from here before a bounce. And in one instance, so here, it's just a small drop followed by a bounce followed by a bigger drop. in this case, it's just a freaking drop that lasts for a number of weeks until market starts gaining the posture again. All right, now this is probably the easiest example right here that I could give you. It demonstrates the market coming off all-time highs at the time. That's 2018. October, November, December 2018 analog. Perfect formation, so 1 test, 2 tests, 3 tests, 4 tests. The purple dot would be either right here or right here. Notice the candle. It drops. Here's the flush, a bit of a bounce for a few days, and then we get the real drop. Now, this drop, numerically, is an 11% drop. So 300-point drop from a level of 2650 to 2350. It's about 11%, just a little over that. And if we were to compare it to the current purple dot, in a similar fashion drop based off the pattern, we're looking at a 460-point drop from here, from the current level of 4137. That would put us at a level about 4681. So if we glance at a longer time frame chart, that wouldn't hit the orange line, right? So it's not crazy to think that we can drop to 3681. And the time frame based off this historic analog, basically out of all the historic cases I just shown you that resemble the pattern either somewhat or some of them are better matches. Clearly this 2018 tornado pattern, the 1973 tornado pattern, they are, and 2008, right, tornado pattern. Those are the best matching setups based off the way the chart, based off the way we're coming off the highs into the setup of the tornado pattern, testing the lows 4 times, okay, and then finally getting this last leg lower. So we are about to find out exactly, but be prepared that you could get a candle like this on a Monday. You could get a candle like this. It's going to be wild, it's going to be fast, it's going to be crazy, and you'd better be ready to trade, damn it. Because those type of days, you get the sharp drop followed by a sharp reversal. Those are the days that get you paid as a day trader, guys. So that's one thing that Warren Buffett wouldn't be telling you because his philosophy is entirely different. He's not a trader. He operates with billions of dollars, so this sort of type of trades wouldn't be suitable for him. Of course, if you really wanted to pull it off, I mean, the market is liquid when you're buying and trading like SPY puts and things like that. Market is definitely liquid when you're buying, Amazon calls, puts. So depending, if you really wanted to do it, he could have. But that's not his philosophy. That's not how he's, he's an investor, not a trader. So if you're a trader, guys, I invite you to join 13 Market Moves and trade with us. And don't miss this potentially wild flush out in the market and a potential reversal or a potential bounce that's further going to evolve into a further drop. So again, trading, I want to stress, is not just knowing what the market direction is going to be here in the near future, but it's about entry, strike, exit. And I invite you to work with a 13 Market Moves coach to make sure that you improve your entries, strikes, and exits when you trade weekly options. So don't miss the opportunity. Study the courses, guys. If your goal is to get better as a trader, if your goal is to see your account grow substantially, not just making a couple of $100 a day, if your aspirations are substantially higher, setting records, taking your account from 50, 100K to $1 million plus, give us a call today. Don't waste any time. Let me show you this chart one last time. The setup is such: 1, 2, 3, 4. The highest probability match we got is 1973, 2008, 2009, and November, December of 2018. Those are based off the chart pattern, based off the chart setup, such as the def cross coming off the highs, going lower, 1, 2, 3. Okay, it's a perfect match to the current conditions. So we could get a sharp move lower followed by a sharp move higher, and what I'm referencing is just Monday alone. We could have that move strong flush lower followed by a bounce. We could also see this as a 4-5 day drop that ultimately will climax, say, next Friday or Monday, and then we're going to get a very strong bounce from here. Okay, the bottom line is if you don't know how to trade this, if you're scared, and I promise you, your emotions are going to be so wild when you see the market drop, 300 points. Again, they're probably going to be shutting down the market in the middle of the day just a few times, just like we've seen it recently during the COVID crash, right? I mean, there were times when Dow was dropping 2,000 points, and they had to pause the market for 10 minutes. The circuit breaker, right? They pause it for 5, 10, 15 minutes before they resume trading again. So those are the type of conditions that we could be seeing going in the next week to 2 weeks. Get ready. Get ready to trade, guys. Get ready to rock. Give us a call today, 13mmtv.com, 13 Market Moves. I wish everybody tremendous trading over the course of the next 2 weeks, and I hope you do it with us. I'll see you in the next video soon. Let's roll.